Hello, everyone. It's Chukandine Soko again, and today I want to talk about what we do in Forex. That is buying and selling. In Forex, you can either make money by buying a particular currency pair or by selling that particular currency pair. So I'm just going to mark 2 points in this chart, which is Euro USD, where you can actually buy or sell and how you can calculate your profits. So first of all, I'm going to take this rectangle and mark this point here, right? And then I'll take the rectangle and mark this point here. So now, if you were to enter a trade, the best place to enter a buy is down here at this point here. Now that's because the market has gotten to this point here, which was, let's call this a resistance. Of course it's a resistance, and this is support. Now the market has gone from our resistance area and dropped and fallen down to our support. Now when market has fallen down to our support, depending on the kind of analysis you've done, at this point you will now buy Euro USD. What this simply means is that the euro is your base currency and it is denoted as 1 euro. Then the USD is your post currency. The US dollar is what you're using to buy the euro. So at this point, 1.13178 is costing you lesser dollars to buy the euro. So when you buy at this point, when it goes up to this point, you then take profit. What we do in Forex is buy, take profit, sell, take profit. So if you enter the market here, you ride it all the way to this point, for instance, and you take profit. So I'm going to just calculate the amount of pips we've made from entering the market here to this point. And you see that's 290 pips. Now, depending on the lot size you use and your leverage, you see this is a whole lot of money, right? So you take profit here. Now, for a sell, now when you're selling, it means the dollar is gaining power. When this is going up, it means the dollar is losing value. It's becoming weaker as against the euro. But when you sell from here, you place a sell order here and take profit somewhere around here. So what you do is buy, take profit, sell, take profit. So when you're buying low and taking profits when the market is going up. But when you're selling high and taking profit when the market is going down. So basically these are the dynamics in trading, and if you understand it very well, then trading will be easy for you. Now I've not done any analysis here, so I can't say I'm entering here to buy or I'm entering here to sell, but this is basically what we do in Forex. I'm just going to mark this up here. I'll just close this, put this text here. I say buy, and then here I would say sell. So when you buy, you see lots of these green candles. We talked about candlesticks in our previous course. You see lots of these green candles going up. That means the market is going up. The price of the US dollar, which is the quote currency, is becoming weak, and the price of the euro, which is the base currency, is becoming stronger. That's why you see all those green candlesticks, and we say the market is bullish. You remember I talked about bullish candlesticks. So the market is bullish because you're seeing more of the green candles in this. This is an upward push, right? So, and in this downward push, you see it's a bearish market. So market is going down, prices, the currency pair is losing value, and you see more of the red candles taking over, and this is basically how we buy and we sell. So here I'm just going to say at this point here, is where you take profit. So I call this TP, or in bracket you say take profit. I love to label my charts, so I basically, once I open my laptop and look at them, I know what I'm doing. That's take profit. And here you enter market here, so I'll just call this here we call this entry, right? So this here is your entry. Basically you buy at entry and then you take profit here. I'm very sure, yeah, most of us wouldn't know. Basically, okay, yeah, and this is your stop loss. I will make this red. Now stop loss means if this market right now is going up, it means you're in profit, right? But what happens when the market now turns back against you? Let's say the market got here and from here it pushes back towards this way. Now stop loss means that when the market comes here, you are willing to exit that trade. This is what you are willing to lose if the market goes against you. So let me calculate from our entry to our stop loss, and you see that's just 87 pips, and you're willing to just lose 87 pips. And if market goes in your favor, you're willing to make from here to here, which is 298 pips. And you see you're making more if market is in your favor, and if it goes against you, you're willing to lose just this particular amount. So here I will label it. This is not responding, but this here is your stop loss. And if in a sell, you're entering a sell position. I'm still waiting for my cursors to come out. If you're entering, okay, yep. If you're entering a sell position, I'm just going to take this here, call this stop loss, right? Yes. And if you're entering a sell position, your stop loss would automatically, by default, by the markets, be above your entry. So this for a sell, this is where you would have your stop loss. So yep, and now this is your entry for your sell, and we call this entry, right? Yep, this is your entry, and then this here becomes your TP in bracket take profit. Did I get it right? I can take profit, right? So yes, that's your take profit. And depending on your strategy or analysis, we have take profit 1, take profit 2, take profit 3. On your way up, you have take profit 1, take profit 2, take profit 3. But I'm going to be showing you more of this when I teach you the strategies that we're going to be doing to trade that will be effective for you as a trader. So basically, in Forex, this is all we do. All we do is buy, take profit, sell, take profits, right? So the market can go any way, and all you have to do is just basically know what you're analyzing. Like we talked in the previous in our previous lecture, your chart. So if I change this to let's say a 1-day chart, you would see that of course everything has just taken a new shape. Yes, you see. Okay, so you can actually do your analysis on a minute, on a day, on 4 hours, on 15 minutes. Now every candle here on this particular time frame represents 1 day. Now this is the 16th of August, this is the 17th of August, 18th of August. So everything happening here is for 1 day. So even in between these candles, you find that if I make this 4 hours, you see inside this 21st of August, you will see candles going up and coming down. So there are those who want to do analysis on the minute charts and on the minutes time frame, and take profits and profits as the market goes up and swings high and swings low. So basically, that is what we do in Forex. We buy and we sell. So we'll be coming to an end of this brief lecture. Next, we would be talking on. I'll be taking you on impulses and corrections, and peep, how to calculate peep value for if you've taken this trade, how to calculate um your profits in pips. First of all, I know I use this measurement tool here to calculate my pips, but that's because I have this. But what if you don't have your computer with you? I'm going to show you how to actually calculate, you know, your pip value and how that can translate into your dollars. So that will happen on our next lecture. So hope you learned something from what I just taught here today, and wish you success in your Forex journey, and meet you on the next course. I remain my humble self, Chukandele Soko. Bye for now.